All right, guys, good afternoon. Welcome aboard to our aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Welcome to the YouTube channel. Really do appreciate it. Before you begin, bottom right-hand corner of your screen, little white logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit the like button, hit that thumbs up for us. Really helps on the algorithms as well. All right, let's go ahead and talk about the market, shall we? One little side note, Discord, the actual app, is down. So it was a complete mission. Right as Powell spoke today, the Discord is down, or went down, and now Discord is still not working. So we have our team, I think they're doing it on the computer or something. They found some kind of other way to do it. So they're handling that stuff. Luckily, we have a team that's ready to roll at any given point. But I don't have access to Discord right now. So it's a system-wide issue. I guess that'll solve itself here in a bit. All right, anyways, Dow Jones closed down 129 points, was up a lot higher early in the day. NASDAQ barely closed green. That was actually nice to see after this nice drop from Fed Chair Powell. S&P down 0.15%, was actually kind of really close to green. 43.49, again, it was up a lot higher. NASDAQ was up very nice, I think around 2.8% on the day. Equal weight S&P down 0.81%, did worse than the S&P, obviously, because tech did better. IWM, which is small caps, fell down 1.44%, 195.97. 10-year yields spiked 1.848 on the 10-year. And the dollar index also spiked as well, up 0.55%. GLD, which is gold ETF, that fell 1.62%, 21.72 for silver, down 1.36%. High yield credit fell, down 0.34% on those bonds. Investment grade down 0.68. Let's see. In terms of oil, oil was up 1.81%, 87.15. Again, I'm still looking for that $100 a barrel. People are saying, is that going to come? I'm like, it's coming. $100 a barrel is coming, and then we'll get back down. So I would get out of all energy longs right at 100. That's what I would go for. Gasoline futures, $2.52, up 2.35%. And gold futures, like we spoke about with GLD, they fell 1.82% to 18.18 an ounce. That's where we are today. So I guess we can go over. Let's go over Powell first. So what Powell said was a whole lot of what we kind of expected, and he kept tiptoeing around. Basically, here's the bottom line. March rate hike is going to happen unless we get some miracle drop in CPI or PPI, which is the Producer Price Index inflation readings. More than likely, you could probably much bet the ranch that on March, we're going to get some kind of rate hike. Now the question on the table is how much? That's where stocks kind of got shaky. Is it going to be 25 or 50? And they even said multiple rate hikes are coming. Every Fed meeting is live. That caused a lot of shakeout in the market. But there's a silver lining. What is the silver lining, Carlos? I'm confident to say that I think we hit a bottom already. Now, with that Fed move to the downside, really the bottom, I'm going to say, let's say not call bottom, but the bottom is 42.60. Now, if that's taken out, then, of course, we have a lot lower to go, which would be around 41.16 and such. But I'm going to set here and just say that that low is not going to be tested. I think we're going to have more upside, and the lows are already done. Confident to say lows are be good for the year, if anything. 42.60. That's pretty much the best we're going to get. Why do I say that? Why am I so confident? I'm pretty sure everyone's probably wondering. Well, again, those October lows. When I based the 2300 low back when COVID hit, the reason I did that was the extension of the drop. It matched almost exactly to the T, 37% drop as the 2018 Fed scare that we had near Christmas time. There was the Fed meeting before Christmas where we just had basically a tantrum, and markets tanked very quickly. We had a quick bear market and we snapped back. I think that's more towards that line than we are to the COVID scare. Now, the COVID scare, I think we did drop more than 37% or so. I may be off a couple of points. But again, that indiscriminate selling in that short of time was more of a panic due to an outer force, meaning, the pandemic. But this one has the measured move. Again, not exactly a 37% drop, but I think, the Fed drop was not 37%, but it tested 2,300. Sorry, I had it backwards. So I'm more inclined to say that this resembles the same kind of drop that we had in 2018 than it does the pandemic. So what does that mean? We will not retest the lows on the pandemic. That I'm pretty confident to say, 100% sure. The only worst case scenario here, the only wild card I can honestly say, is the Ukraine-Russia thing. That's where we'll get some really nasty drops. That makes sense. War is bad, but again, it bounces back, obviously. But again, that could change in terms of the wick, in terms of the next support. But I can say here 4260 is the support that I will be looking for. I would not be shorting here. I'd actually be going long here, and I did. So again, I'm looking at Qs. I'm looking at Tesla on that bounce. Again, we have the conference call in about 25 minutes. Kind of similar fashion to Microsoft. Tesla was down 5%, and then it bounced back, raced all losses. But that was after the conference call, not before it. So we'll see what Elon has to say if he even is on the call. We'll see. But again, 937 is where it closed. 930 is right now, so about $7. I say that we actually break above that, and I'm going to go over that chart in a second. Back to the Fed part. Just want to kind of wrap it up here. 4260 being the low. A lot of this information was kind of priced in. I think traders were kind of expecting Powell to say, oh, we're going to be patient, we're going to be prudent, and all this stuff. He kind of didn't really say that. He said the word humble a lot. I guess he's just trying to admit that he was wrong in terms of inflation being transitory. Fine. But other than that, it didn't seem like he was hesitant that he was wanting to raise rates. And he said in the actual quotes that more rate hikes is fine, meaning, you know, the economy can handle multiple rate hikes. I think that's where this candle comes from. I think we bounce back. I think 4260 is a great support level to have if you're going long here. Again, there's least resistance to the upside. I would actually say probably by tomorrow, if not Friday morning, 4426 on the S&P. So again, what I trade on that in terms of like, oh, have Friday expiry? No. If anything, I would probably do calls for next week. I would not do it for this week because that could be hit or miss, obviously. I don't have a crystal ball, but again, it's just what I'm seeing. So again, we had this nice rise in the morning, and again, right towards the Fed meeting, or the FOMC, it started falling. So again, a green day all around in the daily candle for S&P futures, slightly red day for the S&P spot, and NASDAQ spot was green as well. So again, for the daily candle anyways. But that's what I'm seeing. I expect a little more upside. But again, it was nice to see some green this morning. Let's take a look at Tesla. Again, their earnings, I'm just going to say they were great. They were great earnings. This is the most money they've ever made, the most profitable they've ever been made. So looking at here at some Tesla numbers, you could see that their revenue growth is 65%. Remember yesterday when I said about Microsoft? Again, I was like, that move made no sense. This one doesn't either. So this kind of has that Microsoft feel. So I would not be surprised after earnings today, we'll get around 980. 980 possibly at the open. It was an amazing good number to see, especially being a Tesla shareholder. EPS was $2.54. It beat $2.36. Revenue was $17.72 billion. Estimated revenue $16.63 billion. Quarter four automotive gross margin 30%. Estimated 29.9. That's a beat on margin. That's a beat on revenue. That's a beat on EPS. Free cash flow 2.7 billion versus a 1.67 billion. I remember when they were burning cash and they didn't have enough. Now they're at cash flow positive for the quarter of nearly $3 billion. What a turnaround story. And supply chain being the limiting factor, I think that's what everyone's going through if you're a business owner. And supply chain limits likely to continue through 2022. I don't think that's anything new to anybody. So I believe that Tesla should be around 980, 985 by morning tomorrow, right after this conference call. I was confident in Microsoft yesterday too. I couldn't believe that stupid move that happened. So Tesla will be in a similar fashion. It was a great call, great numbers. I haven't heard the call at all. Here's something I did want to show you in regards to Tesla. Let me go ahead and lower this brightness. Okay, let's take a look at it. Tesla PE ratio. Remember we talked about the price to earnings multiple for Microsoft and how it was a little higher than S&P. But again, you're getting more growth with Microsoft. It's like 5 companies in one, and that justification, guess what happened? We went up today in Microsoft 2.85%. It was up as much as 5. So again, Microsoft, a really good day on a really good earnings. It deserved a higher price, all around. Looking at Tesla. Now, here's what's interesting. Tesla might be its cheapest level based on their earnings than it has been in its entire existence. The lowest it's ever been in a PE ratio wise is 237. We're at 303.05. That's $70 more than its lowest point, meaning the cheapest point, not the cheapest stock price, but the cheapest in terms of price you're paying for earnings multiple. The highest it's ever been was nearly 1,400, meaning you were spending $1,400 for every dollar in profit. So that's what you're paying for. That means that multiple. That's how expensive it is. But again, they are still expensive in relative to the vehicles and the parts industry. I think that makes sense because I think we shouldn't price Tesla as an automotive company. I don't use them as peers for Ford or GM or Toyota. I think Tesla is a technology company that happens to make vehicles. When people get their mind around that, I think Tesla has a lot more room to run. So again, I think Tesla does continue up. If I had to do a price target, I'll take a look here in a second. But going over these EPS shares, take a look, gurufocus.com, type in Tesla PE ratio, and you'll see all this information. And it's really good stuff, guys. I mean, their earnings per share was absolutely a home run. I mean, last quarter's EPS made up of it made half of the EPS growth for the entire year of 2021. Meaning that's how great that quarter was. 50% of the total 12-month growth was in one quarter. That's really great, and that was the latest one they just reported. So again, EPS is just solid. Looking at it here, during the past 12 months, Tesla's average EPS without non-reoccurring income growth rate is 515% per year. Tesla is making money and deserves to have a higher share price. If I put a target here for the next 12 months, let's just say someone was going to ask me, I would say by the next 12 months, I love it. Just say 1,200. Yeah, it'll get back to 1,200. I would be confident to say Tesla gets to 1,200 this year. Lowest it'll go, and from here is 1042. That'd be the bear case, the minimum that I have there. I know it was a mouthful, guys. I apologize, but again, I really wanted to dive into Tesla. I'm going to buy some Tesla tomorrow, like I bought Microsoft today. Let's answer some questions. Ruben's asking, today's reaction to Jerome makes me think that people want a rate hike already, just rip the Band-Aid. Yeah, I had that discussion with Investment Club as well. It's like, do you want to kick the can down forever? I think Powell basically said what everyone expected, and he came off as more hawkish than expected. But again, I think that's a good thing. Rips off the Band-Aid. Let's see if this market can handle it, or just basing on the sugar rush on cheap money. And then it's basically a house of cards. So that's the issue. And again, if we fall back again, remember the Fed retracted a rate hike in 2018. So it's kind of the similar fashion. We did not fall in 2018, December, 37%. 2,300 was the lowest it got. What COVID did was retest that level. What did we retest on S&P futures? We retested the June breakout. I mean the October lows. The lowest point it got in where it actually broke the 100-day moving average in October. So this was more of a check back correction than it was a meltdown or even a Fed tantrum. Let's just say that. So actually a better setup. One more point on Tesla. Take a look here. The stock price right now is at 943. Guess what we went at the lowest point after hours? It was right around 902. You could see it, actually it was right around 880. That was the lowest point on Tesla. If we look at the daily chart, you could see right around 900 to 890. You can see right below there, right on top of the around 910 is that first breakout gap to fill upside. And that was the last earnings. So all we did on the downside was fill that gap, and now we're going to probably go back up. That's why I'm confident in this setup. Hi, Gar. Do you think we'll consolidate for a few months? No, I think we go higher. Like I said, I think the bottom is in at 42.60. Gold is a symmetrical triangle on the 5-year chart, ready to break out on the upside. What do you think we need for that? What we need for GOD is, that's Barrick Gold. You're talking about, you need gold itself, futures contracts to soar. What doesn't help is a firming dollar, meaning interest rates going up. And now you would probably think to yourself, well, Carlos, gold, inflation hedge, gold should be doing that. That's what it should be. That's what it's designed for, but it hasn't been that inflation hedge. It just hasn't. So what we're doing right now, what we did was actually test pretty good, decent resistance around 1850. I've always said above 1800 seems to be that kind of range to possibly reload on some more or actually be bullish on. But right now we're at 1818 and we've just been kind of stuck in a really long range, and it's very frustrating to see. But again, you could see we had that downward slope. Again, this is all COVID, and then we kind of break out ahead of the 1800 level, 1840 level, and then we've just been kind of stuck. So if you look at Barrick Gold, it should be trading in a similar fashion, and it is. So you can see just going through the channel, it did break out a little bit, but gold's got to show me something more for Barrick Gold to go higher. You need at least I would say 1870 on an ounce of gold, maybe 15, was it a 1900 on gold. But again, that remains to be seen because it crawls. It really crawls there. It doesn't spike quickly. So just kind of keep that in mind. Good afternoon. What criteria do you want a stock to meet to include in your options watch list? Oh, I mean, there's no work criteria. Like if there's something I see a lot, I just type it in. Some stocks I own. It's not really like a specialist. Obviously, a lot of these names have high volume usually. Intel chart as well. Yeah, Intel did report earnings as well today. Let's take a look at Intel in the hourly. Intel in the hourly, you could see here, again, support right at 51. It bounced right off that. It is up after hours. Thank you, Tesla. I guess tech is happy. Remember, we talked about that Tesla is more of a tech company than it is a car company. Again, people get it confused. You can't price Tesla like a car company. If not, it'd be the most expensive car company on planet Earth that wouldn't have any value at that price. But again, you could see here, really the breakout level we're looking for is right around the 53 level, maybe 52.5. So I wouldn't be surprised if Intel calls were the highest at that 52.5 level, because that's what I would be targeting. And right there, like clockwork, 52, 52.5, and 53 have the three highest strikes in terms of the call side. That's probably what the traders were targeting. I did not get in this trade. And you can see 10,000 for $50 on the volumes on the put side. So again, kind of an equal weight back and forth. Calls kind of nudging more than puts on that side. So someone was obviously bullish on the Intel call. Nothing has really changed here on the after hours. The big red candle on the after hours from 49.25 all the way high is 53.88. So, or 54.20. Right now at 51.40. We're 20 cents away from where we closed. Is there anything to do here with this information in terms of Intel? Intel is very cheap. That's probably the best thing you could say about Intel. It's very cheap amongst the big chip makers. I don't like Intel just because it's cheap. I just think AMD, NVIDIA, Qualcomm, I'd rather have those names than just Intel. Intel has done really much nothing for all the buybacks they've been doing. I think AMD has been deploying their capital a little better than an Intel has, personally. So I'm more bullish on AMD. I think Intel is cheaper. If you're looking for some more value, maybe a longer term play, then Intel will probably be it. But I don't think of Intel having the same innovation cycle long term or long term growth rate that an AMD does. AMD, you're going to pay that premium for growth, of course. Or again, Intel could just be going sideways, paying you a yield, sure, but it'd be just going sideways for years. While the semiconductor space increases, Intel has been going down the past year. And why do I know that? Because I can just go to SMH, and you can see SMH, the semiconductor ETF, is actually up, while Intel on a yearly basis is in a downward trend. So what does that tell you? Intel is more of a value play. Again, nothing against Intel. They're fine, but I would want to own them because of the fact that I just don't see the growth rate an AMD and an NVIDIA or a Qualcomm does. That's just my personal opinion on it. Thoughts on Chinese stocks? I really only own two. It's NIO and Alibaba. I love them both. I think those are the best two to own. The only other one I would say that I would probably maybe think about getting is JD. Any value of gold going up, rising interest rates? It usually doesn't, unless we have high inflation. Because it's an inflation hedge. So if we have higher interest rates, that means the supply of dollars are going down and there's still demand higher. What happens? The dollar value goes up. Gold is priced in dollars. Remember, rising interest rates is to cut down on commodity costs. So you really don't want to be long commodities on a really high scale of tightening. We're not at a high scale tightening yet. We haven't even gotten our first one. If we're on the third cycle of tightening, the third round, you'll see gold be weaker. You'll see oil get weaker. You'll see a lot of commodities get weaker, since that's what the design is to do. So remember, all these commodities are priced in dollars. If we're rising interest rates, that means we're draining liquidity, meaning we're making dollars more valuable. Hence, the Dixie goes up in comparison to other currencies. Commodity prices go down. That's why that interest rate lever is so key for the Fed, because that really controls everything. It's really just the money supply. It's like a little spigot on a faucet. Again, you open a faucet too much, it's a lot of water, everyone gets wet. If you open very little bit, very lightly, you don't get enough to wash your hands. So it's always that delicate balance. Think of the Fed as doing that with the stupid faucet all the time as they meet. There you go. What are the reasons behind the sell-off after FOMC? Pretty much the reason I could say is that he came off as more hawkish than expected. The market kind of expected Powell to be a little more patient in terms of rate hikes, maybe possibly kick the can that, oh, March will just be one and done and we'll see what happens. No, he was like, we could do multiple rate hikes. Let's see, the economy can handle it. We may even do 50 basis points. Every next meeting is going to be live, meaning no one's going to know what's going to happen. So again, he threw it a wrench there saying, hey, you know, you want to battle inflation, we got to do it. We got to rip the Band-Aid off. And the market didn't like that so much initially, but I think we bounced anyways. I just joined. Did you talk about Tesla yet? Yes, I did. But you can go and check it out. I went pretty deep on that one, on Tesla. I think it goes higher. Do you expect market will continue to drop next week? I actually think we're going to go higher. As we get into the seasonality of February, we should get a nice pop until the second week of February, get a little sideways, and then March we pop. This is the lowest we're going to get, guys. Sorry to disappoint. Again, it's just my opinion. Again, of course, I could be completely wrong. I have been before. But I think 4260 is our floor. That's our bottom. As you can see, we pretty much consolidated there. If you go and take a look at an hourly on the S&P, you can see just kind of a trend up, kind of holding up that trend line. Higher lows, higher highs. Again, that's exactly what you want to see. But 4,500 would really confirm that move to the upside for me, because if 4,500 breaks on E-mini futures, as you can see, now we're in the second level of the house. I say that in our teaching video. That's the next level of the house. Then it's 4,500 to 4,607. Above 4,607, your resistance is at 4,700. That's when you kind of start taking a look at taking some profits. If you did some dip buying or some calls, 4,700, and then after that, I mean, sky's the limit. Now that sounds very easy and dandy, but again, the big wild card. I don't know if Russia rolls down tanks through Ukraine tomorrow. So again, that's always have that in the back of your head too. So again, don't go crazy doing anything, but I'm just saying, keep their perspective as always. Does 4260 confirm a double bottom from October lows? It could. That's what I'm looking at here. What's showing me here is that Monday stop run was pretty much a liquidation, and the target there was the October lows. So again, that seems to be the level where COVID kind of ended as well. I'm kind of going back by the last drop. We went as low as I think 2160. So we did break it, obviously 200 handles. But again, that 2300 was like that nice level to buy. So again, I still think 4260 is the lowest point. I think we recapture the 200-day moving average on the daily and then move on and so forth. But 4500 would really confirm it. If we break 4500, then I'm definitely a lot more confident to the upside, because that was the October lows. So again, December lows. So look at here, you have your October and you have your December. So again, that was the end of November lows, excuse me, going into December. So again, that's just another level up. But again, let's see if we hold. 4260 is the level you are watching. Well, why bearish? It's been over a year. Bearish who? Bearish who? I don't know who's bearish because I'm not. IWM. Okay, so IWM, which was key here, and we got into calls here. I was trying to send it earlier. Good thing I didn't at the end of the day because it fell. But this quarter was down anyways. If you take a look, not really much IWM, but more into the Russell. And I'll show you here. Russell here on the hourly actually has an upside gap to fill. That should fill overnight. That's why I'm pretty confident in some overnight action, if not going into the morning. So again, it's pretty much a play on this recapture here. We should get to around 200 relatively soon. As you can see, IWM, again, that gap that fell today was basically the FOMC gap. That would fill right here on Russell 2000 futures. Kind of get us around 199. That's where we get paid off. And if we take a look at NASDAQ futures, we have a similar gap to fill as well. Now, is it tons of room? But again, it's a good 100 points. 100 points would be nice to wake up to on a NASDAQ tomorrow. So something to watch for. All right, guys, have a great rest of your evening. Thanks very much for joining me. Make sure to hit that like button if you enjoy these videos. G.A.R capitalfx.com. Again, I don't know why Discord is down, but I'll catch you guys tomorrow for the morning note. And I'll keep you guys posted on anything new in regards to Tesla or anything like that. The market is showing green on Tesla. So again, I expect Tesla to be green tomorrow. We'll catch you guys tomorrow for the morning note. Cheers.